All right, let's talk about investing. We're going to pull back the curtain on the stock market and break it all down into simple, clear steps. The goal here is to take you from curious to confident so you can actually get started.
You know that feeling, right? Like stocks and shares and all that jargon. It can feel like this exclusive club with a secret language. Well, consider this your official invitation. If you've ever felt a little intimidated by it all, trust me, you've come to the right place.
Okay, so let's start with the absolute basics. Let's talk about the arena itself. Before we get into how to play, we need to understand the playing field. So what even is the stock market?
The easiest way to think about it is just as a giant global marketplace. Seriously, but instead of, Apples or iPhones, people are buying and selling tiny little pieces of companies.
So, what is a stock really? When you buy a stock, you are literally buying a small slice, a share of that company. Yep, that's right. You become a part owner, even if it's just a teeny tiny fraction. Okay, so you own a piece of a company. Awesome. But how does that actually turn into money in your pocket? Well, it turns out there are two main ways your investment can pay off.
First up is capital gains. This is the one everybody thinks of. You buy a stock, the company does well, its price goes up, and you sell it for more than you paid. Simple. The second way is through dividends. Think of these as a little thank you payment from the company. When they make a profit, they might share a slice of it directly with you, the shareholder.
So we get the what, the marketplace and the product. But how do you actually get in the game? I mean, you can't just call up a big company and ask to buy a share, right? You need a middleman.
And that middleman is a stockbroker, or more likely these days, an online brokerage firm. They're the ones with the license and the technology to actually make the trades for you, connecting you to that huge market we just talked about.
And this brings you to your first real choice. Do you want a full-service broker who is kind of like a personal financial guide that gives you advice but for a higher fee, or a discount broker, which is more of a do-it-yourself platform with way lower fees? For most beginners, discount brokers are a fantastic way to start. Now, once you're set up, you gotta learn the lingo. These are your three basic commands. A market order is just saying, buy it for me now, whatever the price is. A limit order is more strategic. It's like saying, I only want to buy if the price drops to this specific number. And then there's the stop order, which is your safety net. It automatically sells your stock if the price falls to a certain point to limit your losses.
All right, you know the mechanics are how to buy, but the million-dollar question is, what do you buy? This is where your personal style really comes into play, because not all stocks are created equal. One of the first things you'll see is a difference between common and preferred stock. With common stock, you actually get voting rights. You get a tiny say in how the company is run. With preferred stock, you give up that vote, but in return, you get a more predictable, fixed dividend payment. So it's a choice. Do you want a voice or a more stable income? And this is the fun part, where you can kind of match stocks to your own personality. Are you cautious? Blue chip stocks, the big, stable, household names, might be your speed. Feeling a bit more adventurous? Growth stocks are younger companies with huge potential to expand. Or maybe you're a bargain hunter. If so, you'd look for value stocks, solid companies that you think the market has unfairly overlooked.
All of this leads to what is maybe the single most important rule in all of investing. I'm sure you've heard it a million times. It's this old saying right here. In investing, there's a special word for it: diversification.
The idea is so simple, but it's absolutely crucial. Look, if you put all your money in just one company and something goes wrong, you could lose a lot. But if you spread that money across, say, 20 different companies in totally different fields, one of them having a bad day won't sink your entire ship.
But here's the thing. Even if you diversify perfectly, investing is never risk-free. The market has moods. It has good days and bad days. So we need to talk about how to handle those emotional ups and downs. The word you're going to hear all the time is volatility. It just means prices bounce around, sometimes a lot in a single day. But the secret, the absolute key, is to understand that this is normal. It doesn't mean anything is broken, it's just how the market breathes. We actually have these pretty cool animal names for the market's big moods. When everyone's feeling optimistic and prices are charging ahead, we call it a bull market. And when things get pessimistic and prices start to fall, that's a bear market, kind of like a bear going into hibernation.
So how do you possibly handle this emotional roller coaster? It's simple, really. You just have to zoom out. While the market is a wild ride day to day, if you look at its history over decades, the trend has been upwards. Patience is your superpower here.
Okay, I know that was a lot of information.
So let's boil it all down. If you don't remember anything else from this explainer, remember these next 3 points. This is your cheat sheet. Number 1, do your homework. Please, never invest your hard-earned money in a company you don't understand. You don't need a PhD in finance, but you should have a basic idea of what the company does and how it makes money.
Number 2, I've said it before, I'm going to say it again because it's that important. Diversify. Spreading your money around is your number 1 defense against the random shocks that can hit any single company. It's your built-in safety net.
And finally, number 3, think long-term. It is so tempting to try and guess the market's next move, but almost nobody can do that successfully over and over. A patient buy-and-hold approach might not be as thrilling, but it is a proven strategy for building wealth. Remember, this isn't a get-rich-quick scheme.
So there you have it. The secret handshake is yours. The world of investing isn't some exclusive club anymore. You've got the foundational knowledge, the rules, the players, the basic strategies. You're not an expert overnight, but you've got the map. You have what you need to take that first, confident step. Your journey starts now.